Hey, it's Michael Saul, but everybody calls me Tidy, so you can too. And this video is anyone wants some turkey plus updates and another stock to watch. This is market analysis for the week of March 20th, 2017. Hope you had a great week last week. Let's take a look at the market. This is the S&P 500. I'm using the SPY to do my analysis. Nice solid uptrend since the election. As we know, pullback. Then we were in this nice tight coil ahead of the Fed announcement on Wednesday. Raised rates a quarter point. Market popped, did not get to a new high on the S&P 500, and then spent Thursday and Friday in a pullback. Didn't quite give it all back on the SPY, but just about, and back where it started before the pop day on Wednesday. So what does that mean? Does this mean that the high is in? Yeah, I don't think so. Okay, I don't think this necessarily means that the high is in. If you've been watching my videos or getting my emails, which you can do simply by signing up free to my email list, and I'll remind you again at the end of this video, you know that I've been talking about a short-term high being put in that could lead to a consolidation or a little bit deeper of a pullback than we have seen so far. Just something more complex than just a quick little coil and a pop, a coil and a pop, a pullback coil and a pop. Okay, and now since this is a lower high, we may be setting up for an A, B, C. If that were the case, I'm going to just take this here since we already have it drawn and I don't have to embarrass myself. Okay, so if that's A down, and where is create parallel line? There we go. If that is A down and this is B up, then C down would bring us in the SPY to about 230. Is that 234.75 or so? I think there's a gap here we can watch. What's this gap? So this gap up here is 235.09, so we should watch that. All right, so if this is going to be an A down, B up, C down, that's where it would bring us to. And that would still be, of course, a mild pullback. I do believe that we are in for a deeper pullback sooner rather than later. Do I think it's the start of the bear market? Absolutely not. And I get at least one email a week asking me where the high is going to be. I do not know if this is going to be the high. However, I am looking for that short-term high. So, hey, this is a good enough place as any to start. All right, could we go further than just this little ABC down? Well, sure. I mean, if this is the start of a deeper correction or more complex correction, then this could unfold into 5 waves just to make the A wave, then the B wave up in 3, and then another 5 waves down in C. Now, I'm talking some Elliott wave talk. I am the farthest thing from an Elliott wave expert. I am a seat of my pants Elliott waver, okay? And I do love the concept. I don't believe in the quote-unquote religion of Elliott wave, that every single pattern or every single trend has to fit into account or anything like that. I'm not saying that it's nonsense or you shouldn't watch it. I'm a big believer in watching everything and taking what you can from it. Elliott had a lot of good stuff to say. I love his theory on impulsive waves breaking down into 5 waves, corrective waves breaking down into 3, but I am just nowhere near close to knowledgeable enough, and I've tried to learn it. I just not clicking for me. So don't take this as the gospel of Elliott wave or that, oh wow, he's talking a lot. Has he become an Elliott wave theorist? I have not. But again, that doesn't mean that I don't find it valuable. So anyway, that's what I'm looking at here. If we hold here, and if the 20 EMA holds and we just turn it and break, hey, that could happen too. I don't think it's going to be that easy that we're just going to go up from here. I think if we do turn it from here, that we'll go sideways for a little bit, maybe form a high-level base, and then perhaps break again. All right, I am not calling a high here. I am just saying that I do believe a pullback is coming in sooner rather than later. The market has been in a fantastic run. It is overbought, but what's most concerning is how everybody thinks, it's just going to keep going. Trump's president. He's pro-business. He's going to do tax cuts. Oh, the market's going to go nuts. He's, and again, I'm not anti-Trump at all. Not even close, but I just don't like it when everybody gets on one side of the seesaw. I was talking to a friend today, and I did tell him that I think, and I don't like predicting this far out or anything like that, but I think that we could get walloped with a sell in May and go away type scenario this year. I think that if we continue to move up into May at a nice pace, that I believe that, and it doesn't have to come May 1st or anything, and we'll talk much more about that over the next few weeks, but I think that a lot of people are going to be like, hey, you know what, that whole sell in May thing, and I think it's going to be a lot of self-fulfilling stuff, because people are going to be like, look, we're up a ton already, we've got nice profits, start taking some off the table, and I think that's going to snowball into a nice size pullback. Do I think we crash? No, nothing is telling me that we're going to crash here. Do I think we're going to go into a bear market? No, nothing's telling me we're going into a bear market. But pullbacks, even in the strongest frickin' uptrends, are healthy and wanted. Nothing can move in one direction forever unless it's one direction down and the company's going bankrupt or out of business or something else, which usually is the same thing, right? But when we're going up, pullbacks are not only healthy, they give people who have not gotten on board a safe, quote-unquote safe, or at least safer place to get on than just buying new highs. If the trend is going to continue and it's going to be real, fresh money will come in. All right, so I'm not against the market here at all. I do not see a sell signal here. I just feel it is time to, or it continues to be the time, because I've been saying this for a while, to remain cautious, to move your stops up, to make sure you're locking in as much as you can, not being crazy tight with the micromanagement that, any little one-day pullback is going to stop you out, because we know at least we're going to get a one-day pullback. I mean, we've seen that, right? And obviously we've seen more. But so, I mean, I'm not talking about getting super duper tight, but also not being oblivious and Pollyannish and just sitting there going, we're going to just keep going. We're going to go to 18 million. Come on, give me a break. All right, markets pull back. They're mean reverting, even if it's just to an intermediate term moving average. We haven't touched this 50-day moving average since back here in November. I mean, it's just, I just think that we're due here. Again, don't have a sell signal here. Just be cautious. Or don't. It's your money. Okay? Do whatever you want. Here's the Dow. Pulling back as well. See if that can turn and go. Russell. Okay, so the Russell has been acting not as strong. It's been underperforming the broad market, but it's still okay. It's above the key moving averages here. It's on the bounce here. Could this be setting up a head and shoulders? Maybe, if that's the head and that is the left shoulder, then this could be a complex right shoulder. We'll see what happens. It's too early to tell, but right now it's on the bounce here. Mid caps, same thing, acting okay, bounced off the 50-day moving average. The NASDAQ, okay, so the NASDAQ hit a new high off of the Fed meeting and did pull back like the S&P did on Thursday, Friday, but still, look at this, pulled back to still hold a new high. So that's interesting. Not the high from Wednesday, but I apologize, to pull back and hold the previous high, sorry, not the high that we hit on Wednesday. All right, so the NASDAQ's acting pretty good. Let's look at some of the key NASDAQ stocks. Amazon wound up, looking to move. Look at Apple, just a monster. Alphabet, a.k.a. Google, you'll always be Google to me, right? Here's Google acting well. Here's Netflix acting well. All right, what about the semiconductors? Let's look at the semiconductors. They were acting nice, and they're still acting nice. Coiled up at the highs. Clad Tanker, really nice. Another fresh high. Here's Kulik and Suffer. Also in a consolidation here, see if that moves out higher. Here's NVIDIA testing the 50-day moving average. We pointed out this coil last week, said watch for a move either way. Well, it broke to the upside. Nice little push here. See if it holds the 50-day moving average. It comes back, or it can get through. If it does, next level to watch is up here, the 112 area. Not exactly. Do your own work on that. Intel broke below the 200-day moving average, now coming back up to it. If it holds there and it turns back again, look for the lows back from November of 16 to be tested here with Intel. What about a stock like MU? It's still acting okay, or like an 8 analog devices. Nice consolidation here at the highs. How about the banks? Banks pulling back a bit. Okay, pulling back a bit here after coming just shy of 100. Watch the 50-day moving average for support. Bank of America, Citigroup, JP Morgan, Northern Trust. We'll look at Zion. We'll look at We'll look at Bank of New York. Okay, nothing here is saying, hey, get short. Okay, I do not see a short signal here. Oh, it broke the 20 EMA. Okay. I mean, look, if you want to be mega aggressive and look to take a short, well, look, if you're not intraday managing your stuff, could be dangerous here. Now, of course, a stock like JP Morgan doesn't go hog wild. It's not a really high volatile stock. As Wells Fargo, it's not a crazy volatile stock, but you would definitely be fighting the trend here. All right, it's not like, oh, look at this. We'll go back to J.P. Morgan for an example. You're not shorting into a big move like this, right? Where you're just, I'm just fading the momentum. No, I mean, it looks like it could be sitting at support. It may break down from support, but my opinion is, and again, your money. Why look at the strongest stocks right now as places to short? Okay, and yeah, it's not currently, may not be the momentum darling, but it's had a nice, strong move here, and right now it's just congesting here and resting. Maybe for a quick gain, but I think there are better fish to fry if you're looking to get short. Here's Goldman. Watch the 50-day moving average. See if that holds. Here's the broker-dealer. Acting okay. Got the bounce off the 50-day moving average. Here's Morgan Stanley, also headed to the 50-day moving average. Let's look at Caterpillar and John Deere like I like to do. Caterpillar's in a messy range up there, and look at John Deere in a nice tighter range. See if John Deere can break out. Caught this breakout here on the chart. Let's see if it can break out from here as well. Maybe it'll head to the 125 area. How about the biotechs? Okay, so the biotechs acting okay. We talked about Labu in the email and how it had a 31-point measured move so far. All right, it broke 40 up to 55. I mean, not a bad gain so far, but not 31 points yet, right? About 15 points. Of course, as I said in the update and the email, and like you can join the email list. When I first did this analysis, I said, look, once this went 5 points, I was looking to move stops to break even. I would not be watching this and saying, oh, it's 15 points in my favor, already basically tested this high from where it came from. Yeah, I have a 31-point target on it because of the range, but doesn't mean it's going to get there. Not even close. You're not going to give back all these gains, right? That this is all about moving stops and protecting yourself and all that stuff. All right, here's Gilead, still acting like crap. See if the 50-day moving average comes into play there. Here's Biogen. Whoa, no, there's not Biogen. Oh, there it is. Okay, so there's Biogen, still kind of just sloppy overall. So you want to watch what this does here. Let's look at gold. Yeah, gold on the nice bounce. Look at this nice day on Wednesday. Is it going to fizzle out here? Could this be one down and this be two up if I'm going back to my Elliott wave here? Or are we just going to come from here and just rip up here to the upside? I mean, we'll see. But right now it held 114 strong, so until it breaks down below that, you can't give the bulls the benefit of the doubt because we're below the 200-day moving average, but got to be careful getting too aggressive on the downside until that 114 craters. Here's oil. Okay, so oil had the nice impulse down. It's pausing. I expect oil prices to go lower. So I would watch for a continuation pattern to the downside here. Bonds broke down, came back up, tested and held the 20 EMA. So if they turn here, look for lower prices in the TLT. If not, and they get back in the range, well, then it's possible that it could come out the other side, little pendulum trade, right? It goes out one side and then it comes out the opposite way. And if that were to happen, watch for a try to the 200-day moving average. So, name of today's video was Anyone Want Some Turkey? I want to look at the TUR, which is the iShares Turkey Investable Market Index Fund. And this is in a nice little pattern here. Let's take a look. And we'll call it a stock, but it's really iShares or whatever it is. It's been cracked here since about a year ago in April. Came down. Now look, this is not compared to what other stocks will see percentage-wise, but I mean this is not a hugely volatile issue. So from 46 down to 29 or whatever, what was this down to? 29, whatever it is. That's a pretty big move in a year for this. And now it's on the bounce. It got held up at the 200-day moving average the first time, but now it's sitting above it, and it is trying to consolidate and coil up here. If this can break out above 37 and stick, it does have a chance to get up to this level up here into the 40.5 area. And, I mean, gaps here are tough, right, because it's most of the action happens when the U.S. market is closed, and then the iShares just adjust to it. But just watch this. I mean, if it can, like I said, get up to here to the 40.5 area, $40.40 area, whatever it is, and then see if it can go back to this high here at just under 43. All right, so that's one stock. I have another, like I said, it's an iShares, but for all intents and purposes, it's a stock. I have another stock to talk about, but I want to do some updates first, and then we'll get to the new stock. So the two stocks I gave last week, they worked out okay. Let's see what they were. They were UCTT, gorgeous. Okay, 14 up to almost 16. Well, 15 and a half, we'll call it. That's 1560s. Nice move there. Nice breakout there. And the second one was this Universal Display, which, okay, not as nice, but did wind up getting a little wiggle here. Never went down to the 20 EMA or broke this last low. And then, boom, it came out here up to the upside here. So let's see if this can go up to the 90 area. Other stocks that I have been talking about, ATEN still doesn't look so great since it never broke out of this flag, but we'll see if it does. Here's LJPC looking okay, consolidating, see if that gets going. ANET looking nice. Nice little push on that one. Wage looking nice. Test of the highs here. Again, once the highs are tested, to me, this is an automatic stop-loss move, if not partial profit taking. Here's Hasbro. Nice push out of this coil here. 98 up to 101. Almost 101. So far, so good. See if it can keep going. Here's NSIT. Just kind of poke through this upside here. See if this one wants to keep going as well. Here's a Caesarstone. Now, Caesarstone initially came out the other way that we were watching, but now it's setting up. It may decide it wants to break out here, break above the 200-day moving average and this top line. And here's Ralph Lauren kind of sitting here. See if the 50-day moving average comes in as resistance and pushes it back down. See if we can test 75. New stock is Children's Place. Nice pop to the upside. Nice consolidation here. I will draw the lines in. Okay, if I could get my drawing tools, I will draw the lines in. Here's some more stock lists. Just have stock list after stock list. All right, here we go. So here's the trend lines right here. Boom. Boom. So if this confirms, breaks out, see if it takes out 120, see if it can get to 125. So a real quick recap. Think that we're setting up for an ABC pattern at a minimum. Okay, it could get even more complex than that. The ABC brings us down to 235.09 for a gap fill, a little bit lower than that for the measured move. If the 20 EMA holds and it turns from here, I think we're going to go sideways more than just rip it right up and break through 240. So let's see what sets up here on the short term. But again, not saying that this is a sell signal, just saying that it's a, hey, be cautious. We could be in for a bit longer of a pause here. Any questions? As always, tiny@attackthemarkets.com. I will talk to you soon. Don't forget, sign up for the email list. Have a great week.